Hello students, I'll be using this link instead. Alright, so we will start now. So the thing is, I don't think you can speak, so I will have to monitor the chat. And if you have any question, you leave them in the comment section and I will get to them. Alright, so let's begin. The main internal user of accounting information, as in who from the company, from inside of the company, uses accounting information more. So we have four options here: managers, competitors, local community, government agencies. So B, C, and D, these here are external agencies or external users. They are not found in the business. They are not found within the business. So for internal users, you usually have managers and employees. But in this case, we have just managers. So the answer here will be A. Moving on, you have A businessman offers discount for prompt payment for goods purchased. Under which column in history column cash book would this discount be entered? So this here is this person offering the discount. Offering discount for prompt payment. So this here will be discount allowed. Moving on to question 3. Which of the following best describes the double entry system of accounting? Double entry basically means once there is a debit entry, there has to be a corresponding credit entry. Therefore, if you have debit entry valued $400, the credit side should also have $400. Let's see which answer has that. A ledger account must have two sides. Well, while that is true, it's not totally clear. An account must be written twice in the ledger. Twice in which side? This here is also not clear. Each transaction must be written in two subsidiary books. That's not correct. Each transaction must have a debit entry and a credit entry, and this here will be the answer. During the year, a company bought stationery for $220 and used $120 worth of it. What figure would be posted today income statement to represent the expenditure for stationery? So $120 of the amount was used. So following the accrual concept which we use to prepare financial statements, the answer will be $120. Moving on to number 5. Which of the following list of activities shows the correct order of the stages in the accounting cycle before final accounts? So the very first stage in the accounting cycle is collecting source documents. We don't have that here. Moving on to the second, we have entering the information in the daybook or the journals. So that there will be journalizing, it will fall under C. The answer will be C or D. So after you enter information in the daybook, then you will post them to the totals will be posted to the ledgers. Well, also the individual amounts. These amounts will be posted to the ledgers, and after you get the ledgers, then you draw up your trial balance. This answer here will be C. Number 6. Which of the following lists of current assets is arranged in order of liquidity? Order of liquidity means you start from the one that is fastest to convert to cash. And in terms of current asset, the fastest to convert to cash is actually cash. So you look for the one that starts with cash, and the answer here is going to be B. Number 7. What is it? Okay, follow. Item 7 refers to the following balances that appear in the ledger of Mistress G. Dalton. We have 5 items here that ask what is the total of the trial balance. So we have to identify the items that will be on the debit side and the items that will be on the credit side. So we have machinery here, which is an asset, so this will be debit. Inventory is another asset, which will be debit as well. Purchases by nature is a debit value, and sales are credit values. So if you're to add, you'll have 8,000. 4 plus 3 plus 1 will be 8,000, and here we also have 8,000. So far, I hope everybody is okay. Moving on to item 8. On 4th January 2021, $10,000 was paid towards an advertising campaign. Of this amount, $7,000 was used by 31st December 2021. What was the amount prepaid for the advertising? at the end of the year. So we have $10,000 which was paid, but only 7,000 was used. So following the accrual concept where you match the expenses with the income earned, you will see that you spent 7,000. So how much is prepaid? It will be 3,000. I hope that's clear, right? Because the $3,000 wasn't used for the year. Moving on to item 9. Item 9 refers to the following balances at the end of the financial period. We have 5 items here again. What is the total amount for the assets? So just assets will be added. Going through the first one here, motor vehicle. This here is a non-current asset. Payables, this here is a current liability. We'll ignore that one. Receivables, current asset. Capital is capital, it's not an asset. And building this year is a non-current asset. So we add this up here. We have 2,000 plus 2,000, 4,000 plus 10,000 will be 14,000. Moving on to number 10. A businessman bought, I'm using 2022. June 2022. A businessman bought a new computer for $6,000. He paid $4,000 in cash and traded in his old computer. What is the entry to record this transaction? So if you look here, you will see that you have a new computer which is bought. So this here means that non-current asset is increasing. You paid in cash, 4,000 in cash, and then you traded in a computer. So when assets increase, we debit it. So you have to debit the new computer, and you have to credit asset when it decreases. So your cash decreases, and the old computer, the account that you have with the old computer, this amount will also decrease. So debit computer, let's look for that answer. Debit new computer and credit these two. Debit old computer, that's wrong. Debit new computer, debit cash, that's wrong. Debit old computer, debit cash, that's wrong. Debit new computer, credit old computer, credit cash. So that there is correct. Item 11 refers to the following table, which shows the summarized position of Foster and Scott Limited at 6 March 2021. Okay, so we have 4 things here. We have current liabilities, current asset, non-current assets, and non-current liabilities, and those value there should be the total values for the items respectively. What was the capital of Foster and Scott Limited at 6 March 2021? So using the accounting equation, which I hope you know, the accounting equation is asset equal capital plus liability. But in this case, we are asked to find the capital. So the capital will be asset minus liability. So let's add the asset. We have asset is here and asset is here. So the asset equals 300,000, and the liability, the total liability is 210,000. So 300,000 minus 210,000, we'll have 90,000. 90,000. Credit notes issued for goods returned by a customer would first be entered in goods returned by customer. So this here will be returned inwards or sales return. Alright, this is A. In order to avoid writing numerous checks for small amounts, a form may set up. So for small amounts and even for check, we're going to use a petty cash book. Right, so one of the function of the petty cash book is basically one of the advantages of petty cash book, in fact, is to reduce the amount of checks that the business would need to write. Asset test ratio indicates net current asset less inventory available to pay current liabilities. Alright, so this here is actually the formula, but let's go through the rest. Current asset to pay current liability. This here is not asset test ratio, that there is a current ratio. Non-current asset to be sold to pay current liability. Usually you don't sell your non-current assets unless they are old. An overdraft. Okay, that's not an overdraft. So the best answer here, this here is following the formula. The formula is current asset minus inventory, that is closing inventory, divided by current liability. So the best answer here is going to be A. Which of the following accounts is not nominal? Nominal basically means it's not going to go in the income statement. So we have furniture, and this here is the answer because furniture is a non-current asset, and assets go in the SOFP, or the statement of financial position, which is the balance sheet. These three here are going to go in the income statement or statement of profit and loss. Right, so we have commission. This here is going to be an other income, carriage inwards, and discount allowed. Both of them are expenses. Alright, so we're at item 16. Item 16 refers to the following information. We have a bank account. On the debit side, we have 22,000. On the credit side, we have 15,000, and they're asking us to find the closing balance. So what is the closing balance of the bank? So remember, to find the closing balance of the balance carried down, you need to add both sides. So the debit side is 22,000, as we just stated. Credit side is 15,000. You subtract them. So 22 minus 15 is going to be 7,000. So the carried down balance will be 7,000. Alright, so we're moving on to number 17. Remember, if you have any question, please leave them right in this chat because I'm not checking my WhatsApp right now. So I would not see if you're sending anything here. R. Stevens, a petty cashier, receives a float of $350. He spends $320 and requests his float to be increased to $400. If his request is granted, how much will he receive? Alright, so normally for a petty cash book, you will receive the amount that was spent. So in this case, he spent $320. But he is also requesting that the float increased by $50, right? Increase from $350 to $400, which is $50. So an amount, if it is granted, the amount his request is granted, it means that he will collect the 320 plus the 50. Right, so that there will be $370. Alright, item 18. Let me switch over to this whiteboard. It's a bit more technical, I think. Alright, so say this here is the. Alright, let's read the question. Item 18 refers to the following table. So we have period of debt. So it starts with period 3. So it'll start from period 1 because you have to work in chronological order, right? And then you have the receivable amount and the provision percentage. Alright, so just assume that this line is straight. So we have our debit, we have our credit. And the name of this account will be provision for doubtful debt. It will not fit there. Alright, so let's look at the force here. This here is the force here. Let's see. Alright, this here is the force here. So we have to find 1% of 8,000. 1% of 8,000. So we have $8,000 and we need to find 1% of it. So 1 upon 100. So two zeros cancel out here, two cancel out here, and it's going to be $80. So the provision account, you have to credit when you start in the provision account, you have to credit the account. So this here will be $80 on the credit side, and then the actual depreciation account will get the $80 inside on the debit side. So let's move on to year two. Let's see what's happening. And from year two, you have to credit an increase and debit any decrease in the provision. If there is no increase or decrease, then it's just as it is, remain just as the same. So we have 4,000 and we have 2%. So 4,000 and 2%. So basically, 20 will cancel out here. Times 1 times 2 upon 100. Can I go back 17? Okay, just after I finish this one. Alright, the two zeros here cancel out and the two zero here cancel out. 40 times 2 will be 80. So since there is no increase, we will leave this one here, year 1, and year 2 will be technically the same thing, which is $80. There is no increase, so you don't have to make any entry in the profit and loss statement. Profit and loss statement. Year 3, now let's see what's going on here. So we have $6,000 and we have 3%. 3%. I hope you're understanding what I'm writing. I'm kind of new to this. So 0 and 0 cancel out. This one here and this one here. And 62 is 12. This here is 120. So the new provision amount is 120. Oh no, it's 3. Sorry, it's 180. Right, 660 times 3. So now we have to look at this amount to see the amount it's increased by. And if you look here, you have $80 and then you have 180. So the increased amount is going to be $100. So you have to put $100 here. So the total provision is actually $180, which is A. Right, so that's the total provision. That's the total amount that's going to be in the ledger account. Somebody asked to go back to question 17. Alright, our Stevens Petty cashier receive a float of $350. So the float is the amount of money that they are expected to use, or the basic projects that they will use for the month. Alright, so at the end of the period, however much you use from that amount is the amount that the company will give you back. So say from this amount, say that you use $200, they will reimburse you $200. But in this case, the person used $320, which means that they're gonna give him back the $320. But since he asked for the flow to be increased, as in he doesn't want 350, since he doesn't want 350 anymore, but he wants 400, which means that they have to give him the 320 that he spent and the additional $50. So this additional $50 will increase the float from 350 to 400. So we have 50 there, and then he actually spent 320. So 350, 50 plus 320 will give you 370. I hope that's better. So moving on to question 19. Whenever we have calculation question, I'll have to move over to the whiteboard if it's a lot. If it's not, I can just use the calculator. Question 19. Which of the following items of the statement of financial position would differ most in the presentation? When comparing books of a company, so we have a company and the books of a sole trader. Alright, so we have current, non-current asset, basically sole trader and a company, they can use almost the same non-current assets. This wouldn't change. Current liabilities, almost the same, just one thing with differ probably the dividend that's owing, probably just that. Current assets, technically the same as sole trader. So the thing that will differ the most actually is capital. So if you could recall, the company capital section will have authorized share capital, issue share capital, the reserves, any premium, and also retained earnings. Then we have the books of the sole trader. For for capital, we have the opening capital, we have any additional investment, any profit drawing, and just that. Right? So the thing that differ the most is actually going to be capital. What happened to the rest of the videos? Nothing is wrong with them. I will put them back on public soon. Mr. Robert Shoemaker bought a a motor van for 11,000 cash. In recording this transaction, he would. So the two accounts that are going to be affected is motor van, and the next one is going to be cash. Please note that this here is not a purchase because purchases deal with inventory. This here, motor van, more than likely, and plus it's specified here is a shoemaker, right? So the shoemaker is not selling motor van. So motor van can't be in inventory. So this here is a non-current asset, and this here is a current asset. So basically, we're asking what happens when asset increases, what happens when asset decreases. So in this case, the motor van is increasing. When assets increase, we debit it. So debit motor van, and there is a and credit cash because cash is decreasing. Moving on to 21. In Mistress Lowe's ledger, an entry on the debit side of the drawings account and an entry on the credit side of the bank account means that, so debit side on the drawings means that this person withdrew money, and the credit side, this line has been, no, okay, a credit side on a bank account means that the asset has been decreased by X amount. So this basically means that the person withdrew money for their own self, not for the business, and they use the bank account. So let's see what we have here, which will match that. Mistress Lowe puts money in the business's bank account. No, that's not true, right? I said it's a drawing, and based on the information, it's a drawing. The bank puts money in Mistress Lowe's personal account. That's not gonna happen. Mistress Lowe withdraws money from the bank for use in the business. It's on the drawing side, therefore it's not for business. Mistress Lowe uses money for her from her business's bank account for her personal use, and the answer is B. ABC Company received a check from Mr. Murray for $300. How must this transaction be recorded in ABC's book? So the two accounts that are going to be affected is a check, and the next one is the person from whom the money is received. So this person here, we can call him a receivable because it seems as though he is one. Alright, so so basically we have two current assets. What happens when asset increases? We debit it. So we debit the bank, which is where? Debit the bank account. And you have to credit the name of the person or the receivable. Credit Mr. Morris. So that there is going to be 2 and 3. An asset purchased for 1,000 is depreciated. $1,000 depreciated at a rate of 10% per annum using the reducing balance. What is the book value of the asset at the beginning of the third year? So the beginning of the third year is basically the end of the second year. So it has been used for 2 years and they're asking for the depreciation. So let's go to the calculator. So the cost of the asset is $1,000 and it loses 10% of its value. So which means it is now at it's functioning at 90%. So 90% is 0.9. You can do all the calculations in the exam, that's up to you. So at the end of the first year, the net book value of the asset is 900, but we're not asked to find the first year, we're asked to find the second year basically. So you have to reduce it by another 10%. So this here is going to be $810. Or you can use the formula. I hope you know it because you're supposed to know it for maths. So depreciation equal, okay, so this $1,000 is going to be the principal, right? And you have 1 minus the rate. So the rate is basically 10% upon 100% in this case, right? And raise the value, raise the power of the number of years. So you can do this, you can use this formula here and find the depreciation, if you remember it. If not, you use the longer method. Let's move on. Item 24. The following information refers to the following information. A calculation to determine gross profit percentage is as follows. So following the formula, this here at the top here, the $185,530, this here is the gross profit. This figure here is the sales, and this here basically you find percentage. What does the 529,800 represent? This here, as I just said, this here is sales, total sales. Moving on, 25. A public limited company issued a prospectus offering the shares described in the following table for sale at par value. Alright, so we have two types of share. We have ordinary preference, we have the number of units sold, and the par value. Let's see what they're asking for. The issue was fully subscribed. How much capital did the company raise? See, fully subscribed means that this amount that was advertised, this is the actual amount that was sold. So we have 200,000 times $2, that's going to be 400,000. And then we have, but this here is just 400,000 for ordinary shares, therefore this answer is not correct here. And now we have to add it to the preference share, which is $5 times 10,000, which is 50,000. So we have 400,000 plus 50,000, which will give us 450,000. So let's move on to 26. In preparing the final accounts, a business omitted return inwards. So return inwards is another name for sales return. Which of the following items would be affected by this omission? So net sales, definitely remember to find net sales, you have to get sales, total sales minus any returns, right? So remember I said return inwards is the same as sales return. So definitely net sales will be affected. Net purchases, no, it's not used in net purchases. Net purchases basically you have purchases less purchase return or purchase outwards. So net purchases out. Gross profit, definitely remember to find gross profit, you will have to get net sales minus cost of sale. So if the net sale is wrong, which is if 1 is wrong, therefore 3 will also be wrong. So the answer here is B. Moving on up to 27. A business received $5,000 for rent and deposit this amount in its bank account. How will this transaction be recorded? So this here is not an expense. This here is going to be rent received, which is an other income. And we have deposited in the bank account. So bank will be increasing. Bank is an asset, therefore you debit bank. And you credit rent received or rent in this case. Remember that incomes are credited. So we debit the bank account because it's increasing, and you credit rent because in this case it's an income. So let's see, we have, that's A. Debit bank, credit rent, and we have the same amount, right? Please ensure you check your amounts in the exam. More than likely, yes, the video will be available. Alright, so moving on to question 28. Mistress Allen invested 20,000. Alright, so before we do that, just look at what is required of you. How much of the loss will be borne by Mr. Keeble? Remember English paper, you don't do this. Anyway, so we know that there's gonna be a loss and one person, they're asking how much one person will be, right? Mistress Allen invested 20,000 and Mistress Brown and Mr. Keeble invested $5,000 each into the same business. So basically we have $30,000 in capital in this business for this period. The loss sustained for the year was $1,000. So this loss has to be shared. So if they don't give you a ratio, then the ratio will basically be 20 to 5 to 5, and then you reduce that. So it will be 2 to 1 to 1. Unless they give you a ratio, then you follow that. The partnership agreement is silent in terms of losses. All the profits are to be split in the ratio 2 to 2 to 1 in favor of Allen. So Allen will receive 2, Brog will receive 2, and Cable is going to receive 1. Right? So listen to this. They are saying that it's silent in with regards to losses. But once the profit is established, you're sharing profit in this ratio, the losses will be shared using the same ratio. So Cable will be receiving one of the shares. So which means we have 5 shares in total. We have 2 plus 2 plus 1. And we are sharing $1,000. So Cable will be receiving, or will be bearing $2,000, $200 of the loss. Moving on to 29. Depreciation in accounting terms can be defined as depreciation basically is a loss of value of non-current asset over a period of time of usage, that is. Loss of value. So let's look at this. Increase in value, definitely wrong because it's decreasing. Remember, think about it in terms of using, say you're using a computer. Over time, obviously you can sell it back for the same amount of money. So it's not going to increase in value. If we're dealing with increase in value, then that there is going to be appreciation. But we're not looking at that. Money saved to replace a non-current asset. Depreciation is a non-cash transaction. So it's not any money saved. Cost of using a non-current asset for an accounting period. Alright, this seems correct. Let's see what we have here for D. Straight line method or reducing balance used by a business. These here are 2 types of depreciation. There are more types, I think around 5. So these here are just 2 types. That's not correct. And this here is the more precise answer. See, the cost of using a current asset for an accounting period. Torte. What is the production cost of the goods manufactured? Alright, so we'll assume that all these items here are related to the factory because rent and rates can be general expense, so I don't know what exactly we're supposed to do there, but we'll assume that it belongs to the factory. So remember to find the cost of goods. So you have direct material plus direct labor plus any direct expenses. You usually do not find this, but in this question we have it. Plus any overhead. Well, this here gonna be prime cost, right? But anyway, plus overhead. And if we have work in progress, no, we don't have any work in progress. Plus opening WIP. WIP is work in progress. Opening WIP less closing WIP. So this here is that. So let's go get to the calculator. So cost of raw material. The raw material is 7,800. manufacturing wages is the same as direct labor, right? So 21,000. Next thing is direct expenses. One of the direct expenses will be royalties. So royalties are used directly in the manufacturing process, therefore it's considered as a direct expense. Royalties is going to be 200, and this here is basically your prime cost. So now we're moving on to the overheads. Add the overheads to this. We have rent and taxes, $1,000. Direct wages, indirect wages. So indirect wages can be for supervisors in the factory. That's one example. So you have 9,000 there. Depreciation is not just depreciation. Depreciation is machinery depreciation, which is 400. And then we have general factory expenses, which happens to be 600. So the answer is 40,000. Fortunately, though, this question here basically you're adding everything. Okay. So let's look at third one. The following information relates to a privately managed charity. What is the charity's accumulated fund at the end of the year? So this here, basically, in some instances you have revenue and expenses. So you add all of your revenue plus the opening balance, provided it's positive, or minus if it's negative. You have all revenues minus all of expenses, or in some cases you have assets and liabilities, so you have to subtract the liabilities from the asset. So in this case we are dealing with expenses and revenue. So accumulated fund at the beginning of the period is 3,000. Operating expenses, so I will highlight, okay, I'll just highlight the expenses because there's just one of them only. So you have operating expenses, and we have income, and also income. So you have three incomes, you have opening balance, and we have one expense. So remember, you add all of the incomes and the opening balance, and then you less the expenses. So we have 5 and 1, 6 and 3, 9, 9 and 3, 12,000 in terms of revenue, plus opening balance, 12,000 minus 1,000, and that is going to give you 11,000. Moving on to 32. Item 32 refers to the following balances taken from the books of Sheridas Limited as at 30th May 2022. Alright, we are asked to find the working capital. So by now you should know the working capital. Where is this thing? Working capital is current asset, total current asset that is, minus total current liabilities. Right, so let's see what we have here. Alright, so all of the items here look like current. So we'll just highlight the current asset and then we'll subtract it from the current liability. Rent owing, so we have the balance here. This here marks owing, so it's a payable. 200, we won't highlight that. Cash is a current asset, highlight. Creditors is another name for payables. As in this here, they treat payables. We have 1,200. Prepaid insurance, prepayment is an asset, so underline this, current asset that is. Bank overdraft is a current liability. It means that you owe the bank money, but it's not a loan. So let's add the current asset. So following the formula, it's current asset minus current liabilities. So current asset, we have 3,500 plus 300, that there is 3,800, minus 200 plus 1,200, 1,400, plus 4, 1,800, and the answer is $2,000. Moving on to item 33. Item 33 refers to the following information pertaining to the financial year of a business. Alright, so let's see what is required of us. I think I add the formula here. Yeah. So what is the amount of drawing? So let's look at this formula. Please memorize this formula. It's gonna be in the exam definitely. Okay, I did not see the paper. It's gonna be in the exam because it has always been in the exam. Alright, so we have opening capital. To find the closing capital, this is a formula you use. Obviously, you have to substitute some stuff and change the subject and formula in some cases to find whatever is missing. Alright, so we have opening capital plus any additional capital or additional investment plus net profit for the year minus the drawings, and that year will give you the closing capital. So this here is a formula that you will use. This here is the entire formula. You wouldn't get more stuff, but you can get less. More likely you will see less later on. So let's go. The opening capital is 75,000. Add additional capital is 25,000. That's 100,000. Add net profit. So we are supposed to add profit 10,000. So that there we have 110,000. And the closing capital is 80,000. So what do we have to minus from 110,000 to have 80,000? So basically minus 80,000, you will see you have 30,000. So the drawings is actually 30,000. If you were to substitute that in this formula, remember we have 110,000 minus 30,000, and that there is going to give you 80,000, which is the closing capital. Moving on to 34. Peter Smith worked for 44 hours last week. Close this. The rates are $3.50 per hour for a 40-hour week, and time and a half, which is 1.5, for overtime. What is his gross income? So let's go. For the 40 hours, he worked $3.50. The zero doesn't really matter. So basic wage multiplied by time and a half. Alright, so the overtime is $21 and the actual amount is $161. Alright, I hope that's clear. Moving on to 35. A company's rent account had an opening debit balance of... Alright, let me just carry this over. Alright, a company's rent account had an opening debit balance of $2,000. So let's just draw this thing here. So this here is debit, this here is credit, and this account here is rent. So you have a debit opening balance of $2,000. 2,000. During the year, $6,000 was paid for rent. So when you pay rent, you'll create a debit entry in the rent account because rent is an expense, and you would create a credit entry in the bank account or cash account because cash or bank is decreased when you are paying for something. So in this case, you're paying for rent, so the bank will have the credit entry, the rent account will have the debit entry. At the end of the year, there's a closing debit balance of $1,500. So even though they say there's a closing debit balance, it actually means this balance is going to be on the carry down side. I'll show you why just now. So the balance carry down will be 1,500. So if you were to total the debit side, you will have 8,000. And this over here, we have to get 8,000 as well. So the missing figure, what is the missing figure? This here is 8,000. So 8,000 minus, sorry, 1,500 plus what will give you 8,000. So this here is actually going to be 6,500. So we just close off this here, double line, double line. And the carry down balance is, the brought down balance is going to be 1,500. Alright, so you see here, just now I said I'll tell you. Alright, so at the end of the year, there was a closing debit balance of 1500. So the debit balance is actually on the debit side. The closing balance is actually on the debit side. Even though if say it has a debit value, it's a carry down value, and the carrying down value is over here. So I hope this one is clear. So the answer for this is 6500. Alright, moving on. 36. If cash sales were not entered in the books, this would be an error of. Alright, so it's an error of omission because it's completely omitted. The following table shows the balances of the assets account of Biro Club as at 30th June 2021. So they're asking for the accumulated fund. Let's look at what we have here. So these are assets. So you have assets, and if you have any liabilities, then you will subtract the liabilities from the asset. So we have premises, asset, equipment, asset, furniture asset, bank and cash asset again, inventory of refreshment asset. So basically, you add all of these items. So you have 5400 plus 1825 plus 1640 plus $72. Did I skip something out? Plus 960. So I skipped all the 960. The answer is D. Moving on to 38, 39. Alright, cost of goods sold. I added the formula here. So cost of goods sold, which is also known as cost of sales. To find it first, let's look at this formula here. You have open inventory plus net purchase, and sometimes you may have carriage inwards. And add this here, carriage inwards, add carriage inwards, and less closing inventory. This here is the entire formula for cost of goods sold. So first you're asked to find cost of goods sold, then you're asked to find gross profit. To find gross profit, basically you have net sales, which is this two here, minus cost of goods sold. So net sales minus the answer from the top here. So which means if you have 38 wrong, you'll have 39 wrong as well. So let's start inventory. Look at this formula here. Inventory, open inventory is 9850 plus purchases, which is $52,640 minus purchase return $7,762 plus minus closing inventory $11,075. So the cost of goods sold is this here, $50,653. Net sales is, let me see, $83,868 minus 1570. This here is net sales. Net sales minus cost of goods sold, which is 50,653. And we have 31,000. Okay, the answer is this. What happens to discount? Nothing happens to discount. It's an expense and we are not asked to use it. If we were asked, however, to find the net profit, then you would have this $31,645 minus the $911. But we were not asked to find net profit, so you don't have to use that in the calculation. Alright, moving on to 40. Mistress A. Jones paid $250 in cash for repairs to machinery. So please note here, this here is repairs. This here is not machinery. And he paid in cash. These are the two accounts affected. This transaction was entered in the cash book and posted to the ledger. The double entry involved would be, alright, so let's look at here. So the cash, your cash is decreasing because you're paying using cash. So you have to credit cash because asset decreasing. credit cash, and you have to debit repairs because repairs is an expense. Expenses have credit value when they're incurred. So debit repairs. Okay, debit repairs, credit cash account. Yeah. Mr. A. Jones. Mr. A. Jones, basically the name of the company. I don't know. Name of the person. I don't know why they have that here. Alright, moving on to item 41. Item 41 refers to the following table and what is the value of the inventory. So we have four items basically here. The number of the items are here, and we have the unit prices. Alright, so value of inventory. So we assume all of these are closing inventory because they didn't specify. So 100 times 60, it's gonna be 60,000, 6,000, 6,000 plus 8 times 100 is gonna be 8,000 plus. Alright, so this here you have the same price, so we can have this here is 125 plus 125 times 84, and the answer is this. Yeah. Alright, moving on to 42. Mr. Mega's capital on 4th January was 40,000, and on 31st December 85,000. So remember, this here is going to be opening capital, this here is going to be closing capital. He withdrew $1,000 in inventory. This here is drawings during the year. What is his profit for the year? So following the formula, you have opening capital, no, opening capital, which is 40,000. They're asking you to find the profit. He withdrew $1,000 minus 1,000, so you have 39,000. 39,000 added to what will give you 85,000. So we have 85,000. Let's clear this. 85,000 minus 39,000, and you have 46,000. So the profit for the year would be 46,000. So let's input this back in the calculator. You have open capital 40,000 plus 39,000 as the profit, minus $1,000 drawings, and this is supposed to give you your closing capital. Something gone off. Oh, okay. The profit is not 39,000. You have opening capital as 40,000. The profit is 46,000, and the drawing is $1,000, 85,000. Alright, so this here is confirmed, so we are sure that the answer here is correct. Alright, X, W, X, Y, and Z are partners sharing profits and losses in proportion to their capital. The capital of each partner is shown below. So we have the capital. Alright, so we are to establish a ratio. So since these items here, all of them have 2 zeros, we can just say this here is 3, this is 2, this is 1, this is 3. So 3 to 2 to 1 to 3. And the amount of profit we are going to share is 7,000. So let's see how many shares we have in total. So 3 plus 2, 5 plus 1, 6 plus 3 is 9. We're asking about Z's share. So Z is receiving 3 of the 9 shares of $7,200. Therefore, Z is collecting 2,400. 44. Which of the accounts shows how profits and losses are shared among partners? This here, profit and losses sharing, it's appropriation account. Which of the following items are example of current liabilities? Note the word current liabilities. Alright, so mortgages, this here will be non-current liability because mortgages, you expect to pay this over an extensive period of time. So this here will be non-current liability. Even though it's a liability, you can't count it because it's not current. Accounts payable, you expect people who owe you to pay you within a short period of time, less than a year. Accrued wages, okay. If you don't pay your workers, then this here is illegal. So you have to pay this as soon as possible. So these two here are actually current liabilities. So you have C, 2 and 3. Which of the following entries in a 3-column cash book are contra entry? Contra entry means if you have a debit for bank, you have to get a credit for cash. If you have a debit for cash, you have to get a credit for bank. It means that the money is not coming out of the business and it's involved in the same book. So debit cash, credit bank. Alright, this is correct. Let's see what they have the rest. Debit cash, credit cash. No, you have to get debit cash from the credit bank. Right, so you have to get two different accounts. Credit cash, credit bank. This is wrong, right? One has to be debit, one has to be credit, following double entry rules. Debit bank, credit bank. Remember I said you have to get two accounts. So the answer here is going to be A. Alright, let's look at 47. Okay, got it. Kekan, the debtor of A&B Enterprises, settles his account of $120 less a discount of $3 by check. So he actually owed $120, but he's going to pay $117 because he received a $3 discount. How should the double entry be recorded in A and B's enterprises book, right? So K Khan is going to be a receivable. A receivable paying his amount of 120 means that the asset is decreasing, the asset that is K Khan. When asset decrease, you have to credit it. So let's see which has credit K Khan. So we have credit K Khan, okay, this here, and we also have this here. So the A and B are out. They cash. No, he settled his okay by check. So the bank amount is going to increase. Bank account increased by $117. That's among the person paid, and he received a discount. So the book of AB, basically they are offering the discount, so it's going to be a discount allowed. Discount allowed is an expense. Expenses have debit value. Non-discount received. But if we were looking in the perspective of K-Con, then this year would have been discount received. But we're not doing that. We're looking from A and B's enterprises perspective. So the answer here is going to be C. A and B book, the bank amount will increase, their expenses increase, and their asset, which is the name of the person, the trade receivable, is decreasing. So you credit that. Alright, number 40, a partnership, the amount of profit to be received by each partner would be. Alright, so if there is no stipulated deed of how you're sharing the profit and losses, it's going to share in equal proportion. So despite or regardless of how much you invested, it's going to be shared equally. Item 49 refers to the following information. So we have these here. They're asking to find the closing inventory. So remember the formula for cost of goods sold. Cost of goods sold equal opening inventory plus purchases, which is net purchases, minus closing inventory. In this case, they don't have the closing inventory, so let's see what to do. So we have open inventory as 1500, we have purchases at 1200, and we have cost of goods sold at this amount. So basically you have to minus something from this amount to give you 1400. So let's see, minus 1400, and the amount that's supposed to be minus is 1300. So if you were to use the formula, so we have 2700 for open inventory and purchases. Input this here, this 1300, then the cost of goods sold is 1400, and that there is right here. So this here is correct. Alright, so let's move on to 50. Rose contributed $7,000 in cash and a motor vehicle worth $3,000 to a partnership. Rose's contribution to the partnership will be recorded as so she invested capital value 10,000. Capital, when you invest capital in a business, you credit that. So capital will be credited at 10,000, and these two assets, they are going in the business, which means assets are increasing. These two assets are increasing, therefore you debit them. Debit the asset. Alright, so we have here cash and motor vehicle debited and Rose capital credited. Okay, so the answer is C. Alright, when a company declares a dividend of 15%, a dividend warrant to a shareholder owning 1,500 $1 ordinary shares is, so we have 15%, basically 15%, which is 0.15 times 1,500, and the amount is 225. A photocopying machine valued at 5,000 is depreciated at 10% using straight line method. Straight line method basically whatever depreciation is for year 1 is the same amount for year 2. Unlike reducing balance, the amount decreases with the year. So 10% of 5,000 is 500, just confirm with you, times 10%, 0.1 is 500. What is the book value after 2 years? So I said the depreciation in straight line is the same throughout, so therefore in 2 years it's going to be 500 plus 500, so that's 1,000. So what's the book value? The book value is what is worth of the asset after it has been depreciated for 2 years. So it's going to be 5,000 minus 1,000, which is going to give you 4,000. If you use this reducing balance, the answer is also here. So if you make a mistake, you might find the answer as well. An increase in provision for doubtful debts will be, alright, so increase in provision means that year is an expense and it will decrease the net profit. Remember, expenses are minus after you find the gross profit, so it will have no effect on gross profit. But let's see what's going on. Alright, the gross profit aspect is known as the trading account, and the remaining part after the gross profit is known as the profit and loss account. Alright, so it's not going to go in the trading account as I said earlier. Included as a revenue, a decrease is treated as a revenue and an increase is treated as an expense. So it's included as an expense. When the maximum capital a company can raise from selling shares to the public, what is the maximum? Sorry. Alright, so the maximum is known as authorized share capital. Which of the following entries would not appear in the cash book? So remember, cash book basically deal with cash transactions. So let's look for something that's non-cash. Alright, so we have goods sold on credit. This here will be for this will be in the sales book. The rest of them will be like in the cash book because cash, payment, no, money is received here. So even though the book name is cash book, it has cash and bank transactions inside, right? Which of the following will result when opening inventories of raw materials are added to the net purchases of raw material? Open inventory plus net purchases will be cost of goods available for sale, or in this case here is manufacturing account, so it will be cost of material available for use. When you minus the closing inventory, then that there will be cost of, the answer you have from that will be cost of raw material consumed. But in this case, It's cost of raw material available for use. Prime cost, you have to add the wages. Production cost, you have to add the necessary overheads and do the calculation for it. Alright, let's move on. Item 57 refers to the following balances taken from the books of Sheridan Limited as at 30th April 2022. This thing looked like we did it before. Anyway, the current ratio is current ratio. I am writing these things, so please ensure you go through them. Current ratio equal current asset current assets divided by current liability, and liabilities are expressed to 1, right? Alright, so we have from here. Alright, let's identify the items, the current asset and current liability. This here is I'm going to underline the assets. This here is a liability, amount owing. Cash is asset, payables, liability, insurance 300, prepayment. This exact question was earlier, I'm not sure. And bank overdraft is a liability. So you have to add 500 plus 300, that's 800, divided by 2 plus 2, 1400, 1800. Okay, this exact question is earlier. So it's 2.11 expressed to 1. The answer is C. Which of the following items is not considered a source document for payroll? So we have clock card. This here is important because you have the timing from this. Medical certificate, even though this here is important, it's not really necessary for the payroll calculation unless you're looking for absenteeism. Then, well, there's supposed to be some other form. And attendance register, basically signing in when you're going to work. That this here is necessary to see the days that you were there. So the medical certificate will be needed in these instances, right? So if you're absent, it will be recorded in the attendance register. Electronic time card, same thing. You're finding the time here. So the one stuff that's not that important is the medical certificate, because even if you're absent, your clock card will not have the time. Your attendance register while you're absent, how will you sign in? Well, considering that nobody signs in for you. Electronic time card, if you're not there, then this is not supposed to be filled out. Moving on, the standing order of $25 for insurance appears in the debit column of the bank statement. So in the bank statement, debit means that your money is decreasing, right? Remember, it's the opposite when it comes to the bank statement, because bank statement is prepared in the perspective of the bank, and the bank is paying money for you, which means the amount of money you have is decreasing. So debit in this case means that the amount of money you have is decreasing. In this case, the money is decreasing by $25. This amount does not appear in the cash book. How is this item treated in order to update the cash book? So I said the money is decreasing. So when assets decrease, then you create a credit entry. So credit the bank account with $25. Yeah. Look here, you have subtract $25 from the bank statement. The amount is already in the bank statement, so you are not to play with this. You're not to do anything with this, just the bank account. In the bank account, you're making a payment, so therefore your cash is decreasing. And the last item is 60. Alright, so let's go through these figures. What is the cost of raw material consumed? So this here is the cost of raw material available for use. This here is the cost of raw material consumed. This here is the production cost. The rest of them, they have the headings. Opening balances. I don't think we are doing this, but anyway, let's carry on over here. Cost of raw material consumed, this is going to be 3,900. Remember, this 53 is the amount available for use, amount actually used, and this here is the cost of production. So this here, the answer is going to be dot 900. All right, I hope you are following. Should we move on, or what do you think? 2021. Should we go into 2021? Where is 2021? Okay, students, we'll join back in like 5 minutes for 2021. I am locating this paper. Alright, so we're back. Alright, so let's continue. I might do this as a paper. I'll upload the answers later, right? A trader has opening capital of $900 if his drawings were $100 and his closing capital was $4,860. What was his profit? So following the equation that I give earlier from the previous paper, we have opening capital of $900. He withdrew 900. So adding the net profit to this, we have to get this. So minus $4,860, we'll have this here as the net profit. So the net profit is $1,806. Compute this back, put this in here, minus 900, add 1,860, and you have the closing capital as that. Item 2 refers to the following balances at the end of the financial period. What is the total amount for assets? So I'll highlight the assets and we'll select. So motor vehicle 2,000, that's an asset. Motor vehicle payables 3,000, that's not an asset. Receivable asset, and building 10,000. Capital is not an asset. This here is 14,000. I think this is a repeated question. Miss Hoyt, a grocer, bought a computer on credit from Tant Company. In Miss Hoyt's book, which of the following journal entries would be made for this transaction? So computer is increasing, and the credit from this here is going to be a credit, alright, payable. So the two accounts, asset is increasing, liability is increasing. When asset increase, you create a debit value. Please note that can't be purchases because this here is the purchase of a non-current asset for a grocer company. So a grocer company would not be selling computers. Anyway, so the computer is increasing, debit computer, this is a debit computer, account credit cash because they did not pay using cash, they paid, they did not pay at all. It's a creditor. So when liabilities increase, you create a credit entry. So debit computer, asset is increasing, credit the liability. Question 4. During a year, a company bought stationery for $220 and used $120 worth of it. What figure would be posted to the profit and loss account to represent the expenditure for stationery? Following the accrual concept, you will post the amount that was actually used. That is $120. $120 was used. And the $100 will be the prepayment, right? Well, it's not going to be prepayment, it's going to be inventory. The asset ratio means that you have current asset minus inventory. That amount there is available to pay current liabilities. The answer is A. This is repeated from last year. Current liability, as I said earlier, mortgages take a long period of time to be paid. Therefore, the answer is going to be 2 and 3. Payables, as in general payables, and you have accrued expenses. 2 and 3. Alright, this here is the line T. Create the current ratio for a business. So let's see the current assets, current liability. We have inventory, current asset, receivable, current asset, current liability. This here is current liability, current asset. That's it. Alright, so the asset is 1100 plus 500 is 1600 plus 200 is 1800. 1800 divided by 7 plus 4 equal 1100. So the answer is 1.36, sorry, 1.636, which is 1.64 expressed to 1. Number 4, Merrill Industries operates a 40-hour shift per week, which means that 40 hours is the basic week. Overtime is paid at time and a half, and employee they're paid at $50 per hour. What's the gross pay if the person work 9 hours extra? Right, so you work 40 hours at $50. That there is 2,000. And then we have 9 hours extra at $50, and it's paid at person is paid at time and a half plus 2,000. So 2675. Coming up here, which of the following accounts are usually transferred to the income statement? So let's see items that belong to the income statement. Rent, premises, non-current asset, not in income statement, balance sheet. Drawings, once again, balance sheet. Commission received, rent, commission received, income, expense, purchases. Okay, this is correct. Let's see what D has. Purchases, furniture. Furniture is non-current assets. The answer for this is C. Which of the following items is or are capital expenditure? Remember, capital expenditure is purchasing of long-term asset or performing activities that would improve the life of an asset. So we have wages. This is non-current. This is just expense. Expense. No, this here is not a long-term. This is just inventory. So the answer for this is going to be D. Purchasing of non-current asset. 11. Alright, see what's going on here. Item 11 refers to the following information about the operation of a firm. Provision for doubtful debt at the starting of the year is $700. The receivable for the year is $25,000. The provision for doubtful debts is calculated at a rate 2% per receivable. So we have $25,000 as the receivable amount, $25,000, and you have to find 2% of it, 0.02. That there is 2%, right? So this year, at the end of this year, the provision for doubtful debt is $500, which means that it decreased by 200. Let's see what's required of us. What amount would be recorded in the provision for doubtful debts account at the year end? Provision for a doubtful debt. So you have to create a debit entry of $200 because the amount decreased by 200. Right? So when it decreases, you create a debit entry. When it increases, you create a credit entry in the provision account. The decrease here is treated as an income. So once it's debited in the provision for doubtful account, it will be credited in the in the income statement account as income. Moving on to 12. Alright, I think we did this question before. Okay, can a debtor of AV Enterprises settle his debt of $120 less 2.5% discount? Okay, we also have $3. So 1 multiply by 2.0.25. Yeah, $3 though. Buy check. How is it recorded in A and B Enterprises book? Alright, so the receivable decreasing, so you credit the receivable, credit KCON, this is correct. Alright, the bank amount is going to be increasing because the person paid you, and the discount allowed is also, which is an expense, is also going to be increasing. So the answer is discount allowed. It's C. Partnership are formed for the purpose of combining capital from different persons. Okay, that's true. Benefiting from different skills and specialization. Also true. Sharing ideas, experiences, and responsibility. Also true. So the answer here is going to be D. Control accounts are kept in order to Assist management in locating errors, that's true. Increase in profit, not necessarily, not at all. Limiting drawings, definitely no. Limiting expenditure, no. The answer is A. Control accounts are basically used here to see that the double entry of receivables and payables, they are correct. So basically you're locating errors. The monies, alright. Items 15 and 16 refer to the following statement of financial position, which is balance sheet provided for form as at 1st January 2019. Alright, so this over here, basically this over here is going to be treated as debit. This here is treated as credit because it's a ledger account, right? Or T account. Alright, they're asking about the sum of money in one, so the debit and the credit is supposed to be equal. Oh no, this is not debit and credit, sorry. This is an SOFP, so this over here represents the asset, this over here is going to be liabilities and capital. So it's supposed to be balanced. So this here is 500 and then you have 5500, which is going to be $6,000. So this over we have 3 and 1, 4,000, so the missing figure will be 2,000. Right, because it has to be balanced. Remember, total following the accounting equation, asset equal capital plus liability, the asset amount is so far is 4,000. 4,000 plus what give you 6,000. It's going to be 2,000. The following which of the following accounts is represented by 2? Loan. Okay, loan can be correct. Cash, capital, liability. Alright, so we can't use liability because liability is not specific. Because look there, here we have payables and payables quite specific. While loan and capital can be correct, I think we should go with capital. Right, because loan is a liability, loan can also come here. Right, and so therefore this question has more than one answer to me. But to me again, the better answer would be C, as in capital. Using the accounting equation, that is. A trader received an invoice of $4,000 less 25% trade discount. Subsequently, returned 1/8 of the goods. So basically, you have $4,000 and you return 1/8 divided by 8. So the amount that you will return is worth $500. Question 18. Mr. Abel and Mr. Blue purchased goods on credit valued $50 and $75 respectively from Mr. Kane. Another customer paid cash for goods amounting to $5,550. Mr. Kane took goods at a cost for himself amounting to $500. Which of the following figures represents the total in Mr. Kane's sales account? Sales account. So these two here are sales. This one here is a sale. And this $500, it's a drawing. So we're not going to include this. So we have $675. That answer is right here. Which of the following accounts are nominal? Remember, nominal accounts are what goes in the income statement. Wages and rent. Alright, this is correct. Let's see others. Inventories and debtors. This is current asset. This here is non-current asset. Creditors and fixtures. This here is liability and asset, which go in the SOFP or balance sheet. So the answer is A. Which of the following features is associated with private limited companies? Private limited companies means that their shares are not available for everybody to purchase, basically. They are family owned. While this is true, this is not always true. Right? Because you can have friends, you can have families, you can even have persons you are very close associated with. B, shares are not sold publicly. Alright, I just said this. Financial statements are published. This here is not necessary. If you would like to publish it, you can publish it. But if you have a public limited companies, well, definitely the financial statements need to be published. Government agencies purchase shares. If they are not advertised for the community for public, then how will the government purchase? This doesn't make sense. In calculating the gross profit percentage, gross profit, in calculating the gross profit percentage, gross profit should be divided by net sales. That is here. A standing order of $25 for insurance appears in the debit column of the bank statement. So, like I said earlier, the debit side of the bank statement means that you're paying, which means that the amount you have is decreasing. So this amount was not in the cash book, therefore you have to put it in the cash book on the credit side because your asset is decreasing. The following entries would not appear in the cash book. So cash book deals with cash and bank payments and receipts. Goods sold on credit, you did not include credit in here. Okay, so let's see. We're asked to find the closing capital for our business. So the open capital is 10,000. She uses her vehicle and building worth 10,000, sorry, 6,000 and 15,000 respectively. So it's 21,000 of assets. She invested. Then we have customer over 4,000. This year is also this also no. Let me see what's going on. Alright, this is with me for a minute. 21,000. Alright, so let me start by this question. This question here can be worked in two ways. So one, you can use, I think the best way though is using the accounting equation. So let's use that. So the person began the business with $10,000 in the business, right? So this here is bank. So bank is 10,000. Then you have building worth 50. Alright, you have two assets here worth 21,000. And then we have asset owing is as in the customer owing 4,000. So the total asset value is $35,000. So to find the closing capital, we have liabilities. You minus the liability of 2,000, and you also minus the drawing of 1,500, and you have 31,500. Or you can basically use logics and add what is coming in the business and minus what has to go out. That is what I started with initially. Anyway, so in this case here, you can use the accounting equation and you will find the answer. Which of the following will result when opening inventories of raw material are added to net purchases of raw material? So this here is cost of raw material available for use. Item 46, pertain to Tarisha Ali, an employee of a bank. Her monthly salary is 3,500, overtime is 800, and this here is income tax rate. So anything above $2,000, this here is gonna be the monthly salary that is. It's specified here. So you're not adding the monthly and the overtime, just monthly. Anything above $2,000 will be taxed at 25%, and the overtime, the total amount is going to be taxed at 30%. The total income tax to be deducted from the salary is what? So we find 25% of anything above 2,000, which is going to be 1,500, plus 800 times 30%, and therefore the income tax amount is going to be 615. Mistress A. Jones paid 250 in cash for repairs. The transaction was entered in the cash book, paid in cash, right? And was posted to the ledger. The double entry would be cash is decreasing, credit cash, debit the expense, which is repairs. Debit cash, no. Debit cash, no. Credit cash, yes. It's that. How does an increase in bad debt affect a sole trader's financial statement? So bad debt is an expense. When you have expenses, the net profit will decrease. Which of the following items are not recorded in the appropriation account? In the appropriation account. So interest on loan partners, this here will go in the income statement, not appropriation account. Interest on capital, this will go in the appropriation account. Withdrawals from partners, this here will go in a separate ledger account. So 1 and 3 are not recorded in the appropriation account. Which of the following entries in the three-column cash book are contra entries? Which of the following entries in the three-column cash book are contra entries? So remember, contra, you have two different accounts, basically cash and bank. One has to be debit, one has to be credit. And that is A. Item 31 refers to the following information. So we have balance. What is the balance per bank statement? So I will assume that this here is the updated cash book balance. So $506 updated cash book balance. Normally, you would add lodgement and minus unpresented check to update the cash book, the bank statement balance. But in this case, we're given the cash book balance and we're asked to find the initial balance on the bank statement. Therefore, we have to work backwards. So instead of minusing lodgement, instead of adding lodgements, you will minus lodgements. And you will add unpresented check. Add unpresented check. So the answer for this is 530. Moving on. Alright, so this question here was before in the previous paper. Basically, all of these items are assets, so we just add up the figure and it will add up to this. So we got 5 and 1, 6 and 1, 7 and 1, 8. Yeah, basically more than 8,000. Which of the following items, please don't do that in the exam. Use your calculator and find the actual answer. Which of the following are long-term liability? Which of the following are a long-term liability? Long-term means supposed to last for more than 1 year. So creditors, you're expecting the people who owe you to pay in less than a year. Debentures, well, yes, this is correct. Accrued wages, like I said earlier, it's illegal to be owing employee for an extensive period of time. So imagine somebody owe you for over a year. Anyway, imagine what would happen. Bank overdraft this year is for a short period of time and you have to pay back the bank, and it's usually at a very high interest rate, higher than bank loan. So the best answer is debenture, and you normally find this in companies. What is the amount of insurance prepaid at the end of the year? The end of the year amount prepaid is right here. In the beginning of the year, 700 was prepaid. This amount was paid, and this is the actual amount that was incurred. So at the end of the year, 600 is remaining. So just remember, this amount is the prepaid amount for the previous year. The 8,000 here is the amount that was paid for this year, and this year is actually the amount that was incurred. So the prepayment for this year is going to be 600. 35. what's the inventory at the end. So I think we worked this question before, was 1300. So you add this two here, open inventory plus purchases, that's 2700. 2700 minus what will give you 1400. Minus 1300, you have 1400. Which of the following items on a statement of financial position would differ most in the presentation when comparing the books of a company and the books of a sole trader? Like I mentioned in, well, previously, it's D, because company has different preference share, ordinary share, authorized share, capital, premium, reserves, retained earning. And this one here just has opening capital, any additional capital, possibly net profit, and closing capital. In some instances, you just have capital. A photocopying machine was bought at $500 $5,000 depreciated at 10% using straight line method. What is its book value after 2 years? So 10% of 5,000 is 500, and like I said earlier, with straight line, the same amount is used for all of the years. So 500 is in year 1, 500 will be in year 2, and 500 will be for all 10 years of its life. Remember, 10% will make 100%. So which means that this asset is expected to last for a period of 10 years. Anyway, so for 2 years, the book value will decrease by $1,000. So year 1 it will decrease by 500, year 2 another 500. So that's 10. That's 1,000, and the book value will be A. Adina Williams is a petty cashier. If she has a float of $200 and she spent 180, how much should she be reimbursed at the end of the period? So like I said, the reimbursement is the amount that is actually spent, so it's going to be 180. Which of the following is a book of prime entry? So there are 7 books of prime entry. You have sales book, which is also known as sales journal, right? Sales book, purchases book, sales return or return inward, purchase return or return outward, cash book, petty cash book, and general journal. So the answer here is going to be sales journal. Which of the following financial documents shows the net earning of a business? Net earning for a business will go net earning. Alright, so the net earning, you'll find that using the income statement. A sole trader uses his trading account to determine, this here is going to determine gross profit. I don't know what is super profit. Surplus is usually found in the income and expenditure account, not in the trading account. Net profit is when you minus expenses that is not found in the trading account. In order to avoid writing numerous checks for small amounts, the firm may set up the petty cash float, which is petty cash book or petty cash fund. Which of the following states the correct stages of the accounting cycle before the final comes? So before stage, obtaining source document, we don't have that. Then you put the stuff in the books. The books are also known as journals. So after source document, you have journalizing. So C or D. After you journalize your entries, you will post them to the necessary ledgers. That is D. And then from the ledgers, you balance them up, and then you get your trial balance. Then you drop your trial balance rather. According to the Partnership Act, if there is no deed of partnership, the amount of profit to be received by each partner would be, and the answer for this would be divided equally. In the books of partnership, the salaries should be debited at the drawing account. That's incorrect. Salaries will not go in drawings account. Credited to the appropriation account. It's debited to the appropriation account because the money is reduced, right? Debit, as in the company's money, the profit rather is reducing. Debited in the partner's capital account means that the capital is decreasing, but the partners are receiving a salary. They right? Of Foster and Scott Limited. So they're asking to find the capital. So you find the asset, total asset minus total liability. We have assets here, and we have assets here as 300,000 minus 210,000, and that was going to be 90,000. A mechanic starts his business with 10,000 worth of tools. What entry should he make to record this transaction? So we have tools, and this year he invests $10,000, so this is going to be capital. So tools and capital. Debit bank account, no. Debit capital, okay, basically we say that it means that it's going to close on the account probably. Debit tool, credit capital, okay, that's a correct entry. The net profit of a firm was shown as 1,600. It was later discovered that the discount received was undercast by $10. Alright, so let's get this calculated. So the net profit is 1,600. The discount received was undercast means that it's understated by $10. The discount received is an income, so which means that your profit is supposed to be higher by $10. But let's see what's else. And purchases were undercast. Purchases, you can treat this as an expense, so which means that profit is going to be decreasing by $36. And this is going to be $1,574. An asset was purchased for $1,000, depreciated at a rate of 10% per annum using a reducing balance. So basically you have 10,000. What is the book value of the asset at the beginning of the third year? Like I mentioned earlier, beginning of the third year is technically the end of the second year. Alright, the asset is decreasing by 9% in the first year. So this here is the net book value for the first year, but we're not asked to find that, we're asked to find for the second year. So 900 reduced by 10%. Reduced by 10% means that you times it by 90% and you'll get the book value. And that there is $810. Let's look at 50. What is the capital at 4th of January 2021? So basically we have R.A. David operates a small grocery. You have been asked to assist in the preparation of the final accounts for 2020 and have been provided with the following information. So more than likely this information here would include assets and liabilities, and you have to subtract the liabilities from the asset to find the capital. Okay, I will highlight the assets. Debtors, a liability. Payables, liabilities. Overdraft, liability. Inventory, this here is asset. Okay, this is asset. Long-term loans is a liability. So 80,000 plus 180,000 is going to be 260,000 minus everything else. 40,000 minus 25,000 minus 35,000 minus 130,000. Alright, I think I made a mistake somewhere. Oh, no. Okay, the debtors here, this here is an asset as well. Why did I skip that one out? Next day for trade, receivable. So you have 40,000 plus 160,000. And we have 200,000 minus everything there. So you have 25,000 minus 35,000 minus 130,000. Why do I go off? Oh, the fortune is 260,000. 40,000 plus 80,000 plus 180,000. 40,000 plus 80,000 plus 180,000. This is supposed to be 260,000. Minus 25,000 minus 35,000 minus 130,000. The answer is 110,000. Okay, so now I add this to, I said 160. Okay, crazy. Fifth one, Mr. Green and Mrs. Black agree to establish a partnership. Mr. Green and Black Co. That's the name of the partnership. And each of them deposited $5,000 in the bank account. How should this be recorded in the partnership, books of partnership? So we have bank as 10,000, partners bank account at 10,000. It has to be debited because the bank is increasing. And you credit the current account of each partner. No, not current account. You credit the capital account because they invested this amount. After the transaction take place, then you're gonna go to the current account. So credit cash, this is not correct. Debit, alright. No, the bank is increasing. Debit partnership bank account, this is correct, but you're not using the current account, but you're using the capital account. Right, so the capital account deals with the investment, the amount that they invest in the business, and the current account deals with the different transactions that occur during the year. 52 to 53. Jekyll Limited sells skin tomato juice. The following inventory information was available for the month ended 31st May 2020. Using FIFO, what is the value of the ending inventory? So we start with 40, we purchased 20, that's 120 we have. And they sold 10, 110. So that means that 10 inventories are remaining, and using FIFO, it means that you're starting from the very beginning here. So the 10 inventories that are left are valued at the last price, which is 515. So the answer for this is going to be B, and then you're asked to find AFCO. So for AFCO, you have 40 tins at 500 plus 80 cans at 515. You have 40 cans at $500, and then you have 80 cans $20,000 plus 80 cans at 515. Alright, so this here is the total cost of the inventory. Remember, for AFCO, every time we purchase, you have to recalculate the cost per inventory. So this here is the total cost for these inventories that are remaining. And how many inventories we have? We have 120. So the cost for one inventory is $510. And 10 items are remaining at the end of the period. So the answer for this is going to be 5,100. To which account should depreciation of office machines be transferred? This here, depreciation is an expense, so it's going to go in the profit and loss account. Which of the following accounting entries should be made if goods are sold on credit? Goods are sold on credit. So if you're selling goods on credit, which means you are now having a receivable, which is an asset. So you'll debit receivable account, debit accounts receivable, okay, same thing, and you credit the sales. Remember, sales always have a credit value because sales is an income. Which of the following may be used to calculate the cost of production? So cost of production, basically half prime cost over half prime cost plus factory overheads. So this here is wrong. You have minus factory overheads. So ACD. Alright, for opening whip, you have to add opening whip. So this is wrong. This is wrong. You add opening whip and you less closing whip. So the answer is D. Alright, 57, let's see. An PMO is employed by construction company at a rate of $7 per hour. During the week, he worked basic hours of 40. Alright, that's all for working. So that's his basic pay. The income tax on his pay is $20. Okay. And he's liable to pay national insurance contribution of 5% of his gross pay. So 5% of this amount, I'll minus the 5% first. So, I don't know, 7 times 40. And then you minus 5%. So minus 5%, you times it by 95%. So 95% means you minus the 5%. And then I minus the $20. If you are not familiar with working percentages like this, then you can do the longer method. What is a net profit percentage? Net profit percentage basically is net profit expressed upon net sales. So we have net sales here. Alright, so we need to find the profit, the net profit. So we have gross profit at $12,000. We have discount received. This is going to count here. Rent expense. Okay, I should just remove this. We have this. Alright, so we have gross profit of $12,000. We add other incomes. This here is $2,000. This is the discount received, and then you minus all other expenses. 3,000, 4,000, 7,000. So the net profit is 7,000. The net sales is 30,000. Therefore, the profit margin is 23.33, which is 23. Wrong with it. When a company declares dividend of 15%, the dividend warrant of a shareholder owning $1,501 ordinary shares is, so you have 1,500 shares and you find 15% of it, so 225. The prime cost is this amount, $79,110. Office expenses is this, 3,000, and factory overheads is $4,720. What is the cost of production? So this office expense here is not going to be calculated in the cost of production. It's going to go in the income statement. So basically, you have $79,110 plus $47,020, and that there is going to be $83,830. That there brought me to the end of this paper. Anyway, so we'll stop for today.